Hi, happy Friday. Nick Neal with New American Funding and Nick on Rates. I hope you're ready for a nice weekend and the start of a nice summer. Finally saw almost 80 degrees here this week. It was awesome. And Sebastian is happy. He thinks it's ice cream time. And I have to agree with him. I think it is ice cream time. I think we're getting finally to the point. I've said this before, but I really believe it now. And hopefully Powell will start believing it soon. That's the one thing that's kind of standing in our way. We've got Powell who's been dragging his feet on lowering interest rates, and this happens because they don't want to lower too soon and cause inflation to come back. So they're going to be more cautious than they need to be, but he's really gone overboard with this. And it's funny, was a meeting in the White House. Trump invited Powell to the White House to have a meeting, and I don't know what he was expecting to get, probably hoping to negotiate or get him to come around to his side. And what most other people believe is that we need to lower interest rates right now, or Powell needs to do that. But it sounded like all the press said was that it was a cold meeting. It wasn't very productive. It was just cold. So not a lot happening on that front. But hopefully he will see these numbers that we're getting and finally realize that we're in a trend to where he can start to lower interest rates. And he needs to before he slows the economy too much and pushes things into a recession. Because the actions, like we talked about before, the actions that he takes with interest rates take a while to cycle through the market. Whether it's up and down, business doesn't change overnight. It takes a while for it to cycle through. So things are slowing, and he needs to take his foot off of the economy and let it stabilize with lowering interest rates. And right now we're looking at good numbers for this week. We had PCE numbers come out. 0.1. These are the inflation, personal consumption expenditure numbers, and these are inflation numbers that we want to see low, we need to see low. They just came out. We have 0.1, expecting a 0.1. So it was right at expected, but it's in the low range that we need to be able to keep our, just about zero with inflation for the month. We need to see that to keep our annual number down. And for April, we got a year over year of 2.1, which is right at the bottom end of what the Fed wants to see for inflation to be able to lower rates. So they're in the range they want to be. We've been seeing that it's consistently been in that range, expecting a 0.3, so that was lower than expected. Personal spending a 0.2, expected 0.2, that was good. And so then we had GDP numbers come out as well. And remember, we've talked about before, if you get a negative GDP, that means we're actually recessionary. And you need 2 in a row for anybody to call it a recession. But right now we have a negative 0.2, expecting negative 0.3, so they thought it was going to be low. Last month we had a 2.4, so that was kind of an extreme high. And we've talked about how sometimes you're going to get these ups and downs when things are still kind of bumpy on this downward trend that we're getting. But a negative 0.2, slowing economy, recessionary numbers for GDP. Jobless claims were up, 240,000, expected 220. So all of these numbers are good for interest rates, and we need Powell to start reducing rates. And again, the rates that Powell controls are the overnight banking rates. So they don't affect mortgage rates directly, but with the way that the yield curves are right now, they will have an effect on mortgage rates. Recently, yield curves have been inverted. So you're actually getting the same return on a short-term investment as you are in a long-term, or different, even lower sometimes. It's just crazy. But those are getting back in line to where they want to be. That's another good sign. We've got our yield curves consistent, where the longer you hold your money, the more interest rate that you're going to get. You're going to get shorter for short terms and longer for long terms. That's what we want to see, because it's tying up your money longer. So all of those things are good for interest rates. And I had a couple agents ask me, what rate are we at? I love how you talk about interest rates, but what's the current rate today? And I can't tell you exactly because I already have to give you a whole bunch of numbers. But right now we're around 6.75 with no points for a 30-year fix with really good qualified borrowers. So that's sort of the range we're in. And we want to see that coming down closer to 6. It just seems like with the current market, with real estate and everything, if we can get closer to 6, it's going to be more comfortable for people. Ideal into the 5s and maybe even 4s again. But getting back down around 6, as you get up to mid 6s, high 6s, 7s, and higher, it really slows things down for us. So that's what I'm talking about as far as interest rates and mortgage loans is what we're talking about. Pending home sales got hammered, minus 6.3. So that, that's down. That's another thing that we see more in our industry. It doesn't have as big an effect on interest rates, but really did get hit on pending home sales. Last month it was 5.5. So again, we're just up and down depending on what rates are doing. Rates were down a bit last month, so probably got a few more sales signed up than we had this month. But yeah, the one thing that we got to watch next week, and I just hope this doesn't happen again. It's happened in, you know, in recent years where, and this year too, where we get these jobless numbers on the employment numbers, new jobs that the government puts out that are inflated. They're just artificially high, and then they come back and revise them down into a lower range right where they should have been, alongside of the ADP, where we talked about ADP is the largest payroll company in the country, and they should have a better handle on the number of new jobs created than what government's using as far as the statistics and stuff they pull together, because they're always pulling them together high, and it shocks everybody. So we've got another jobless reports coming out next Tuesday, and hopefully that won't knock all of this really good economic news that we're seeing. So right now with the charts, we've got treasuries. Remember, this is the one we want to go down, that we'd actually started an upward trend again. We had this long downward trend that, you know, we wanted to see, but then we'd started an upward trend over the past. But again, we're getting enough ticks here. We've got enough of these red downward ticks that we're starting to start a downward trend again. So hopefully this will, and it's falling right back in line with the old line. So hopefully this will come back down and start a downward trend on treasuries again. And then on mortgage-backed securities, these are the ones that we really watch for mortgage interest rates. We've got a nice upturn again, and we had a downward trend going, but again, like we with the treasuries, we want to see this turn around and begin, you know, to go up again. We're breaking through these Fibonacci lines that we've talked about. This was a tough one. We hit it 3 or 4 times in a row. It's always been an area of resistance, this Fibonacci line right here, but we've broken through it. And with the good economic news that we have, hopefully we'll stay above it and then work our way up to this next line, and again, have a challenge to get through that line with the technical factors. But hopefully jobless claims or new jobs created will be legit with the release next week from the government, and we'll continue this improvement in rates, and just see interest rates coming down again from about the 6.75 range where they are now. Call me, text me, fax me if you need help with a loan, or if you have clients that are interested in a loan. I just have an agent fax me or email me about our bridge loan. We got a really cool bridge loan. I've had bridge loans in the past. Some of them didn't exactly do everything that you needed them to do, or they were just a little hard to work with. This is a real easy one. It works perfect. It does what everybody needs. It gives equity out of their existing home to buy a new home, and just holds that money with no payments until they sell their old home. They've got like a 12-month period to do that. Once they sell the old home, they pay off the bridge loan, and they're into their new home and ready to move forward. So it's really a nice program. Do you need a 700 credit score? But if you got that, all of the other things that we need in a bridge loan are contained in this bridge loan. So we've got NAP cash. I was telling them alongside of our bridge loans, we can help you buy a home for cash if you need to do that. Just getting rid of contingencies, so people don't like those. But as far as regular programs in my team, we're killing it right now. We had 4 nice closings last month. This month, it's still not this month. And everything went really smooth. Everybody's happy again. That's 5-star ratings, and just appreciating all the communication and on-time responses that we have. We've got one right now. We got docs to escrow 3 days ago, and it closes on Tuesday. So more than 5 days ahead for docs to escrow, which is always our goal. 360-286-5037. Call me, text me, fax me if you need me. Have a great weekend.